Here in the United States, apartment construction is on the rise. Housing starts for multifamily homes jumped 78% in January, posting their highest monthly gain since February of 2009. Ken Simonson, chief economist of the Associated General Contractors of America, joins us now from our Washington bureau with more on this story. Mr. Simonson, welcome back to Bloomberg's Bottom Line. Always good to have you on.
Why, thanks. Good to be here again.
Is this a trend that's going to continue?
I think so. There are several things propelling it. First of all, private sector employment has risen for 10 straight months now, and that's enabling more people to move out from mom and dad's place or get rid of that roommate they're tired of and go rent their own place. Second, you have pockets around the country, for instance, around the military bases that have been part of this BRAC military base realignment and closure process. They're about to get thousands of new people, and if you look where those bases are, they're often out in rural areas without a surplus of housing, and there are going to be a lot of people wanting to rent there. Similarly, in some of the areas that are now getting new mining or shale activity, there are people coming into areas that historically have had very little excess housing.
Are you getting a sense from contractors that the rise in multifamily construction is continuing?
I'd say it's just starting. Multifamily was extremely depressed for several years. Even during the single-family housing boom, that was taking people out of the rental market and putting them into home ownership. Now we're seeing the opposite trend, that single-family houses and condos sometimes are being offered as rental properties. So that may actually tamp down the new construction a little bit. But I think there are enough people who are deciding they want to rent instead of own or live with somebody else that the demand will spark a lot of new construction of purpose-built rental housing.
Did we get a sense in December, the last month of last year, that some builders pre-bought permits?
I think so, that there were changes in permit regulations for issuing housing permits in California and New York City and a couple of other areas that may have caused a rush to the permitting office. So permits did drop in January, but there's always a lot of fluctuation in these monthly multi-housing figures, both permits and starts, and tend to be big revisions. So what I prefer to look at is a 3-month moving average. Those figures were actually a little stronger even than the January to January comparisons. The multifamily starts were up something like 87% in November to January compared to the same period a year ago, so almost double.
Mr. Simonson, why is the condo market still struggling?
Well, condos, I think, compete with single-family homes. Also, a lot of people had been buying condos as investments or as vacation properties and as future retirement homes. And all of those rationales for having a condo have pretty well gone away. A lot of people suddenly can't envision retiring. They're being a lot more cautious about their vacation spending, if they can even afford to take a vacation. It may be a staycation, and any kind of housing now has attained as not being the kind of property you would invest in.
And it's interesting because on the economic side of this, it seems that the capital markets, they like the multifamilies, right?
The market rate rental property, yes. I don't think capital is flowing into building new condos or buying the existing properties. And the subsidized market, which has benefited in the last couple of years from stimulus funds for retrofitting properties to reduce their heating bills or otherwise improve energy efficiency, I think that money is about to dry up. But the traditional market rate rental property, that's attracting a lot of investors.
Are we getting a sense now, at least are you seeing anecdotally, that developers are now scrambling to catch up because in the next 5-10 years there's going to be so many more renters as opposed to homeowners?
It's early days for that. I do feel that it's possible we're going to see that the traditional home buying age demographic is going to say, no thanks, I don't want to lock myself in to a mortgage that I might not be able to pay a year from now, or be stuck with a house I can't sell if I decide I want to move to a different market. Those people may really flood the rental market, but so far it's so early in the recovery and the home buying or home renting process.
Right.
I think we'll need a few more months to see.
Mr. Simonson, in our last minute, is this all connected to the rise in foreclosures, or is something else going on here?
Oh, I think it's several things beyond that. The foreclosure business is actually playing both ways. Yes, people who are being forced out of the homes they own, they may be candidates for renting. On the other hand, those houses, if the bank can't sell them, or someone who had tried to sell their own home, they may be adding it to the stock of rental housing. So there are both effects of increasing supply and increasing demand of what had been owner-occupied housing. So
Right.
I think there's a lot more going on with the rental market.
Mr. Simonson, if I might ask you quickly in our last 15 seconds, when does this housing situation turn around?
It's going to be a process. It's not a single date. It really, all real estate is local, as we constantly hear, and this really depends what's happening to the job picture in any one market.
All right, Ken Simonson of the Associated General Contractors of America joining us from Washington. Mr. Simonson, thanks so much. We appreciate it.